Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of interviewing Ken McElroy. How you doing today, Ken?
Good, good. How are you? Good to be on your show, man.
Yes, I'm doing well. You know, it's really surreal when I'm able to interview some of the folks that have been very instrumental in my journey, my financial journey. And, your book, The ABCs of Real Estate Investing, was one of the earlier books that I read after reading Rich Dad, Poor Dad. So I'm excited to be here with you today.
Well, you certainly earned it. One step at a time, right?
Yes, indeed. Yes, indeed. And so obviously there's a lot of financial macro things that are happening in our nation. And so I want to get your perspective on how you see the current interest rate environment reshaping the investing landscape and how it impacts the various assets. Obviously, we see real estate. Some folks were hoping that the lower rates would introduce lower rates for real estate and homes. Then obviously the lower rates have impacts on stocks and other hard assets. And so just curious in your perspective on that.
Yeah. So I think, well, first of all, I think we need to address why there's so much focus on rates. And I think that people got really soft on where they've been just recently, right? So in my 25 years of investing, almost 30 now, actually, these rates today are pretty normal compared to my history, my 3 decades, let's say. I started investing in the 80s, and so 6.5. While a lot of people are freaking out right now, so I just want to point that out. And the other thing is when rates go down, it creates bubbles, right? Like everybody has to acknowledge that. So everybody wants low rates, which I get. But then what happens with low rates is people get into more debt. They, because the money's cheaper. That's, interest rates are a result of that. So right now, I don't really foresee a lot of rate changes. A little bit here and there, I think. And the big wild card, of course, is going to be the unemployment factor. And, so the Fed kind of has it. Well, they have a lot on their plate, obviously. But the two primary things are unemployment, which is at 4.2 right now, projected to go to 4.5 by the end of 26. And then, of course, you have inflation, which is hovering right around 3, which they want at 2. So you have kind of two things going on with the Fed at the same time, and both of which they're concerned about. The inflation rate is higher than they want, and the unemployment rate is projected to go up. So so that's why I'm not so bullish on these big rate cuts next year. Obviously, Trump's got a new Fed chair coming in mid-year, I think May. But that's if we see anything. Don't forget, there's a whole committee. There's a chair, but there's a whole committee, and they're also going to monitor. Even though this is what he wants, they're going to monitor the fact that he wants the rates really, really, really low. And what that does do is it spurs things. People buy cars, they buy appliances, they buy electronics, they buy real estate, they refinance, and all that kind of stuff. So I understand why he wants all that, but we have to also pay attention to what that does. So, so right now, I think it's a fantastic time personally, and not only because I'm in real estate, but to buy real estate because if the rates go down, then, as you know, it's going to create another bubble. It's going to drive prices higher, as it does. People stretch for pricing. And so right now, when rates are a little bit higher, it's a great time to get deals.
Mm-hmm. Yeah, for sure. So just kind of pulling on a couple threads there, I've been kind of doing some research in terms of recently Ray Dalio put out a piece about the Fed stimulating into a bubble, and there's a lot of information about is the Fed going to have to be the backstop for the government as we see the amount of debt and deficits that are continue to have to be financed, and so kind of looking at the path, and I know, many of us are just speculating, like we don't know how this is going to look, but we do know that Trump wants a dovish Fed. When we look at a lot of the reshoring of manufacturing and such, if capital is more expensive, that can create some challenges there. And so people are like expecting that the money printers are going to come back on and that the Fed's going to abandon its inflation agenda, controlling inflation. And so just curious if you have any thoughts on that.
Well, I do know that that's certainly on the table. So is the 50-year mortgage, and all these things are kind of hanging out there. I don't. Those are massive policy changes. But even if they do, let's say they move it to 3, it's still 3. You know what I mean? So the question would be, what should we be doing today if inflation stays at 3 or above, let's say, because it is at 3 today. So it's not speculation that it's at 3. It is at 3. So, and of course, not long ago was up at 9.1. So, so what does really well in inflationary environments? Hard assets, right? Yep. Do extremely well. And so the question would be, what you would not want to do during this inflationary time, especially if they move the needle up, is you would not want to be in cash, because your purchasing power erodes over time as inflation drives prices up. And so I think that whatever ends up happening, there's several moves at any given time. And that's actually what I think is the most important thing for your listeners here is, don't be so caught up in a quarter point here, half point here, half point on the inflation, all that kind of stuff. Just understand what it does to the bigger picture. And then, don't be a pioneer, but just be out in front of that somehow, right? So if you think interest rates are going to go down, well, there's 2 moves. One is, lock your rate today, make sure it cash flows, and then refinance on the way down. Or lock your rate today, and if it goes up, you look like a genius, And so either way, what your price is. That way you're not guessing. Just make sure that it cash flows today, and then pay attention to what you're buying. One of the things that scares me is the stock market. Trust me, I've been in it. I'm not, but I don't want to have all my assets in it because I don't understand it. I don't feel like it's very controllable. I don't know why at this point things go up and down. It seems like because it's marketing and a lot of people are running on something kind of like crypto a little bit. So with real estate, I break it into what's controllable, what's not controllable, and I can control the price I pay, the interest rate I get, where I buy it, what tenant I put in there, what the expenses are, and how to manage them to a large degree. And as long as I budget for the increases appropriately in some areas, I can control my cash flow pretty well. I really feel like there's so many other things that are really very speculative and are out of my control.
Mm-hmm. Yeah. Thanks for sharing that. Because I was thinking about real estate as a hard asset. Obviously, you're able to cash flow a property, but then you also get the benefit of the increase in the equity on the property as well. And so, it's like a win-win situation as long as you're in the right deal, right? And you get the right deal. So
I always tell everybody, buy something that somebody else pays off. You know what I mean? That's a really clear and easy thing to understand. Can you imagine if you could buy a car and have somebody else pay it off? Okay, well, just imagine that's what they do in real estate.
Mm-hmm.
Buy something that somebody else pays off, and then just hold it.
Yeah, for sure. So what you mentioned the stock market. The stock market's obviously at all-time highs. Many indicators, like the Buffett indicator, shows that it's overvalued compared to the GDP and such. And then when we look at hard assets like gold, when you look at the gold to S&P ratio, that's been coming down, where it takes less amount of ounces of gold to buy the S&P. And so one thing that I've always kind of been probably more cautious about with the stock market is that when we see like the charts of these stocks at all-time highs, it's priced in nominal dollars, and we know that inflation has eroded away a lot of that over the years, versus like gold. You can like actually price a home in gold or S&P in gold, and you can determine how many ounces it would take to purchase that from any particular time frame. And so I'm curious, in your perspective on stocks at all-time highs, are you like not touching it, or are you kind of just moving with a cautious perspective?
Sure. Well, I think I was forever changed when I read the book Peak Prosperity by Chris Martenson. If you guys haven't read that book, I think it's a great book. And in that book, and I can see it as plain as day, he had a pyramid. And at the base of the pyramid were what he called, raw mineral commodities. So let's call it water, timber, silver, gold, oil. You get the point. So everything kind of comes out of the earth, right? So, and he's like, that's where you want to be. That's the base of the pyramid. The next tranche up are the companies that extract that. And then the next tranche up is the stock market. He calls it the paper market. So, when you buy a GLD ETF, it's a claim on the actual physical gold, which is clear at the bottom, right? Mm-hmm. And so for me, that forever changed my opinion of how I invest. And so I always try to have physical gold, and or oil wells, or like I own water rights, and there are I own a lot of silver, and I'm getting into timber right now, and so because those are things that are grown from the earth, and somebody's going to want them, and they're worth something. And so now they're tricky. You got to navigate. It's not as easy as just going online and buying a stock. You got to figure all that out. So I'm kind of with you. If you look at where the very first people that get wiped out are always the people that hold paper. They're holding a claim on whatever it is below it, and that's right. So the company is still in business if the stock goes up and down, right? And then what are they getting their materials from? You want to be at the very, very, very bottom, in my opinion, and that's kind of where it's safest. That's farmland, for example. Those kinds of. Even though it's difficult to manage and run farmland, it can be done.
Circa 2020, we pivoted the entire company, turned on its head, brought in new management, George B., our CEO, who's built gold mines all over the planet, and we focused in on CK, copper cake. It was not reliant on drill holes and discoveries. We can go through this process, engineering, permitting, get towards a development stage asset. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
Yeah, for sure. And we know that those assets are going to appreciate, over time, especially as the currency, the purchasing power of the currency erodes. And so, owning land, owning gold and such, those are going to continue to increase in dollar terms. I remember listening to you share a story about buying some land, and I think you had some oil reserves or something on the land, and that's kind of like a area that's like out of my wheelhouse, but it's inspirational because it's like, okay, you went and bought this piece of land, and you were able to make additional profit on it and such. And so I'm curious in buying land, which that's something that's been spoken about with many different investors. I hear about in multi-billionaires buying land as well as hard assets and such. And so just curious in your perspective on buying land and how that can be beneficial.
Yeah. So I'll just tell you, I don't love buying land because it doesn't produce cash flow. So to me, And you might be buying in the wrong path of progress too, right? So you got to be careful when you're buying land, but there's a bunch of ways to cash flow land. So if I ever bought a piece of land, and I always have a plan for it, always, right? So, mostly what I'm known for is I'll buy a piece of land, and the goal is to get it zoned to build apartments. So let's say I bought it by 20 acres for a few $1 million, and I'm going to put a 300-unit apartment on there. It might take a year, it might take 2 years to get that approved by the city or the county to have apartments on it. When I get that approval, that land is worth a lot more to somebody. So now what I've done is I've forced value on that land. So before it was raw land, and now it's raw land with the ability to build 300 apartments on it. It's very, very different. So I can sell that at a premium into the market. So at that point, I could literally exit. I could sell to a guy like me and say, you can break ground tomorrow on these 300 units. And I would be pleased because I saved 2 years with somebody else's hard work. And they get paid for that. So that's one way. Another way is to carve off a piece and build something on it, and then sell that off so that you now own the rest of the land free and clear. So I'm always looking at a way to own land free and clear. I've done this with a billboard, where I bought a piece of land with a billboard on it. And I put an easement around it, and then I got the billboard to cash flow, and then I sold the land for almost exactly what I paid. It took me about a year to do it, but again, I always had a plan. So I don't oftentimes just buy something without a plan. I know a bunch of farmers, and believe it or not, there's a heck of a lot of farmers out there that lease land. They, especially in Arizona here, they lease land for garbanzo beans, which are chickpeas, which is basically hummus. As they expand, a lot of these farmers that know what they're doing actually lease the land. So that's another strategy. I know another guy that's doing it up in Nevada for solar, where he's putting solar farms on the land in rural Nevada. So I always like to have something where I'm not just sitting there and hoping, that things, come to me. If we buy a mobile home park, for example, then it cash flows on the land. But oftentimes I'll buy a mobile home park for the land, and then I'll wait for the city to catch up, and all of a sudden that mobile home park is in the middle of town. It might take 5 years, might take 10 years, might take 20 years, okay? But at least it's cash flowing in the meantime, if that makes sense. So I'm a cash flow guy. I'm very rarely let's plant my stake in the ground and see where things go. I almost always have plan A, B, C, making sure that I have backups to my backups.
Yeah, that's very important. Even for me, hearing that, because I remember it was like a few years ago, I was looking at land in like Arizona, and it's like, hey, you could buy acre of land for a couple $1,000s in the desert.
Yeah, be careful, man. Nobody wants to go there.
I'm like, do they even have roads to these places?
Yeah,
or what?
Probably not. Yeah.
So that's definitely important to factor in. What are some of the kind of like most interesting investments that you've been excited about, like when you've purchased land and you completed a particular plan with, and you're like, okay, this is something that I'm really excited about?
Yeah, there's been so many. We've done self-storage, we've done custom home stuff, we've done a lot of ground up construction, we've done office building conversions, we've done ground up construction for multifamily, we've done build to rent. So there's really a lot. I think actually one of the most fun projects I have is I ended up with a resort in Sedona, Arizona, and I had no clue how to run a resort. Now, we have a management company, so I do know how to run property, but I do not know how to run a nightly. Like my tenants move out every 6 months, every year, something like that. And this is a nightly thing with a kitchen staff and a commercial kitchen and waiters and all the stuff that you would imagine. So I had to understand food costs and the liquor piece, and I had to get my liquor license and all that kind of stuff. But I really, really, really like it because it actually pushed me out of my comfort zone. It made me get better because you have to look at something like that daily. There are daily things that go on that can move the needle on something like that. It's not just an occupancy play that you can manage, from week to week or month to month. There's a lot of marketing and there's a lot of customer service around it. So what it did is it made me better for my other things because I realized that. In some respects, a set it and forget it model kind of makes you soft, and a resort is not a set it and forget it model. And what I did was I created massive value at this property, by implementing a number of things. I've owned it for 10 years now, and it's one of the higher rated properties in Sedona, which is the second tourist spot in Arizona behind the Grand Canyon. So literally, it's just in a spectacular area. It's spectacular property, 120-year-old property. I'm the third owner. And that's been really, really, really fun for me.
Yeah, that's cool. I'm sure you got to obtain a lot of skills with running a resort rather than just putting tenants in there. So it's a whole different skill set, different brain muscle. Just thinking about housing in general, some folks are concerned like housing is like overstretched, that at some point we may see a crash. Obviously the dynamics are a lot different now than 2008. And some of the prices have cooled off since 2021, 2022, when the Fed was pumping trillions into the economy. And so I'm curious in your perspective there, because there's, a lot of issues. You got the 50-year mortgage and so the affordability issue comes out and that is front and centered in media and such. And so just curious in your overall perspective on housing. Obviously, location matters. So like sometimes people may say, oh, well, housing's going to crash. And it's like, okay, well, what location are you talking about? Or or what county are you talking about?
Right.
And so just curious in your perspective on housing in terms of that.
I start with housing at a 30,000-foot view. So if you take a look at, the population of the U.S., for example, they're usually in one of two categories. One is homeownership, and the others are renters. So they're in one or the other. And so, and now I'm not talking about a family under, an 18-year-old and 17, 16, 15 or anything like that. Typically, they can be in one or the other. But if you just take a look at it, right now the U.S. is at 65% home ownership and 35% renters. Now, that's a really important thing to watch first, because I also want to point out that what is good for one is not necessarily good for the other. In other words, if the home ownership side of the equation is unaffordable, then it pushes people to the rental side. If home ownership is affordable, then it pulls people out of the renter side. So it's really important to watch what's going on between the two. So when people talk about housing, I usually ask, so what kind of housing? Is it like single family? If it's single family, then I always also look at the rental piece, right? And again, to your point, what's going on in Cincinnati, Ohio is very different than what's going on in Portland, Oregon, or San Francisco, or Phoenix, or whatever. And so you have different dynamics going on, affordability prices going on, rent prices going on in all these different markets, and they could not be more different, as you know. And then even in those submarkets, it's even more different. Typically outside of the city, you typically see a lower rent and a lower home price and all that kind of stuff. Not always, but so all of that is important to look at. And so as I start to take a look at housing in general, I have to go back to the 2008 GFC, the Great Financial Crisis, which I personally went through. And I saw millions of homes being lost and move over to the bank and move over to the listing side. So what did that do? What that did was it added a lot of housing to the listings, and it added supply. The availability increased. The supply of housing increased. And so what happens when you have a tremendous amount of supply? The prices come down because as a consumer, you have lots to choose from. Same thing with apartments. If there's too many apartments in an area, the renter has lots of choices, and they're all competing with each other on pricing. So I always look at those dynamics going on. And so I kind of start there. Now, to answer your question about where do I think single family's going, I wish that it goes down because it's not affordable right now, and it should be. And it's expensive. I think last I looked, it's right in the low 400s. So the differentiation between a mortgage and a rent is huge. The difference, the gap between those two is huge. And the problem that we have at the currently is people are actually being forced into the rental market. And so what does that mean? What that means to me is that you're going to soon see pressure on rents. Rents are going to go up as people continue to get out of their parents' house, graduate from school, hopefully get good jobs. The stretch of them being able to buy something is going to push out. In fact, we just passed the median household age for a first-time home is 40. It just hit 40 in the last couple of months. That is extremely high. I mean, back when I was a kid, which seems like forever ago, it was in the 20s. It was in the high 20s. And so in my lifetime, I've watched affordability go out the window for all kinds of reasons. We can go down that rabbit hole for all kinds of things. And so I think we're heading into a real rough time. I don't see a housing crash at all. And I still think we're severely undersupplied, personally. If you just look at population growth versus people building housing, we've never really caught up from the GFC.
Mm-hmm. Yeah. What type of, so like in the area I live, there's typically houses, they have a bit of a land attached to it. Lately, I've been seeing more of like the smaller kind of units with like a mini like strip of grass in the backyard and such.
Yeah,
like it seems
ADUs. Yeah, accessible
yeah.
dwelling. Yeah, the ADU market. That's big up in Seattle area, which is the area you're from.
Yeah, for sure. So I've been kind of curious, like for folks that want to, typically like when you think of home ownership, you're like, oh yeah, we got a backyard, the kids can run, the dog can go out and run around and play and such. But I've been seeing like more of the smaller kind of plots of land where there's been building there. And I was wondering if there's any trends there.
There are. Yeah, it's a really, really astute point. This is an affordable housing issue. If we didn't have this problem, this wouldn't work. But there's different cities, counties, states looking at affordable housing. And there's restrictions around these too. I'm seeing it in Scottsdale. I'm seeing it in Austin. We're certainly seeing it in the Seattle area, which is where you're from, where they put some kind of restriction on the size. So maybe 350, 400 square feet, something like that. But there's a lot of scenarios where you have an alleyway and you convert a garage out back, for example. Maybe you have a long, narrow lot, and we're seeing this all over the place. And it actually has its place in a good way, because if a homeowner can build, a 500 square foot ADU with the which is really an affordable place to live. These are $500 to $1,000, a month. Probably upwards more of $1,000. you can make those numbers work, and people have privacy. They're not encroaching on they're not coming through your front gate and walking in the back. So it has to line up just right. But there's a lot of this going on. I have friends doing this in Scottsdale, where literally the front of their home and then way in the back they had this 2-car garage, and they're converting it to an ADU, and it's going to rent I think for around $1,200 a month for basically a studio, and they will never see that tenant come and go. Literally, right? Doesn't have access to their backyard or anything, and it completely faces the street behind them. So, yes, those are something. That's why we're seeing this rise of the tiny home. I even saw Home Depot has like a kit, like a home, a tiny home kit you can buy. I think last I looked, they were like $60,000 or something. So imagine that. Just be able to buy on a credit card a tiny home and throw it in the back and rent it out. Those numbers make sense.
Mm-hmm. Yeah, agreed. I mean, especially if you're living in a area where it's more of the urban areas and stuff. Where like Seattle, it's the property values up here just skyrocketed, right?
Yeah.
So
right.
It's definitely interesting. I got some friends that make 6 figures and they struggle to afford a home in Seattle. So
how crazy is that?
Yeah.
But by the way, that's where I grew up. So I know I used to live downtown Seattle. Think about that statement you just made. Like, people that are making 6 figures are having a tough time.
Yeah.
Like that is not supposed to be.
Yeah, I totally agree. So just thinking about over the next, before we get there, I want to get your perspective on gold. You mentioned that you own gold, and so obviously gold has performed well in the recent months and years, a couple of years. And so just curious in your perspective on gold and how do you approach this asset?
Yeah. Well, I think that's where we met at the gold conference, right? In
New Orleans.
Mm-hmm. Yeah. And I had never been to that conference, but I went because, why did gold, go from jump past 3,000, past 4,000 in a year? And I wanted to hear from people that know gold. I don't know gold. I have been buying it forever just because of my relationship with Robert Kiyosaki. Robert and I are incredibly close, and he got me into gold over 10 years ago. And to be honest, man, like, it didn't move much forever. Like, it sometimes is up and down, and I just kept buying it at these pretty low prices, and I was doing it more as an insurance policy against the U.S. dollar, because back then, even 10 years ago, we were printing like crazy. Now, the printing presses seem to be going crazy now. And so could that be the reason gold is on a run? Maybe. Could also be because central banks are buying it because they're frustrated because we're paying them in U.S. dollars. That could be part of it. I heard all kinds of people talking about that, but I love the physical gold. I keep it in a Brinks vault, so it's all professionally stored, and I just slowly chip away at it. So I'm not real heavy in it, but I do have a fair amount, and I've just been slowly buying it over time. And sometimes I buy it, it goes down. Yeah. It might be down for a year or two, but again, I don't really look at it as I'm not trying to cash flow it. I'm just looking at it as an insurance policy and trying to get out of U.S. dollars completely. Yeah,
totally get that. Do you touch silver at all, or is it?
Yeah. We have a lot of silver. I have a fair amount, actually. We actually got together with a mint and started minting our own silver with our own company logo, and we give them out at our employee events. I've been doing that for 10 plus years. We had a 20-year reunion for our company with a 20-year coin. So I've been a silver bug forever.
Send some of them my way, man.
Yeah, we got a bunch, man. Like, and I tell you what, I went back and looked, and I think at the time we were buying for $18, $19, $20. If they give you a blank, and then it was $3 or $4 to print something on. So my costs were in call it the mid 20s, and we bought so much, and all of a sudden gold, but forever again, silver didn't do much, and then now it's on a bit of a run.
Yeah, it's almost at $60. So that's been pretty exciting for many people, and it's really showing like some of the structural dynamics with the supply and the supply deficits that have been going on for about 5 years. And so, silver's been on the run. And then any other assets that you focus on? Obviously, real estate, gold, silver. You're not too much into the stock scene, and so are you into any other assets?
Well, it's interesting. It's a great question. I am pretty heavy in real estate, but I'm heavy in different kinds of real estate. So, like I said, we have a resort. We have office buildings. I'm buying billboards right now, and from that one billboard story I told you about, I'm closing on another 6 next week in Nevada, between Las Vegas and Mesquite, Nevada, along Interstate 15.
What's the secret behind billboards? Like,
there's not much of a secret. They're pretty dumb, man. Like they're just sticks with flat screens in the sky. So, and you drive by them every day, and you read them as you're driving by, because you can't read your phone, or you shouldn't be. If you are, that's another issue. But most people, most cities, states, counties don't like billboards, because they're clutter, I guess, and so there's pretty heavy regulations generally around being able to put them. So if you can find property with them, find an owner that has them, and sometimes you have to acquire the real estate to get it, but it could be very, very lucrative. And so what we've been doing is we've been buying what we call two-sided billboards, and then we convert them to digital. So essentially you go from 2 ads, 1 on each side, to digital, which is 8 per minute per side. So you go from 2 ads to 16 ads. So it's a value add.
Cash flow.
So you buy the lease and the board, and then you convert it to digital. And those have been really, really good for us. Again, it's a cash flow play. The other thing I like is it doesn't require a lot of people. Like, like sometimes you have to build these huge teams. It's the digital ones especially can be done, from a laptop, right? Yeah. So and obviously there's some graphics and things that have to be done, and that's super easy to figure out. But and of course you got to keep it full like anything. So who rents on those things? Personal injury lawyers, casinos, car dealers. You get the point. So there's a whole industry. It's sneaky as you drive by. Don't miss the McDonald's on this next exit or whatever it is. There's no shortage of people that are trying to get your attention when you're driving, and so that's been kind of the new asset class we've been focusing on lately.
Yeah, that's very interesting. Especially, we would think like in a more digital age, like those things would die off, but like that, there's like a high demand still for it.
I think like once driverless cars come, man, I'm probably toast. But as of right now, where people have their hands on their wheel and they're looking forward and they're deciding on where they want to stop and all that kind of stuff. And I bring up driverless cars not necessarily just as a joke, but we have them in Phoenix. We have Waymo in Phoenix, and they've been. It's a big deal. People use them all the time, and they just this year are starting to go on the freeways. So it's coming, right? So but the billboards also are a great tax play because they fall on the category of bonus depreciation, which means that you can write them off in the year you buy them.
Okay, yeah, that's total. That's awesome. So anything that investors should be kind of mindful of over the next 12 to 24 months. I know there's a lot of things up in the air. Central bank independence is obviously a question, even over in Europe, as Italy's prime minister wants the Bank of Italy to give the $300 billion in gold that they have to the state and such. And so the central bank independence it's being challenged over there. Then also we have over here with Fed Governor Lisa Cook. And so, I think that could be. I don't know how markets are going to react out of that, but just curious in like your perspective, if there's anything else where investors should be, just kind of cautious of or paying attention to over the next 12 to 24 months.
Well, it's a great question because that's how I look at everything. I look at 12 to 24 to 36 months. And so I think the way I look at, this administration, and I don't necessarily agree with everything I see for sure. I do agree with some things, but I had the same way with Obama, with Clinton, with Bush, certainly with Biden. So I don't get too political around any of this. I just say, okay, well, what is it that they believe? What are the policies today? The big, beautiful bill, and I know it's controversial and all that, but the reality is it's here. Okay, so you can bitch or you can look at it, and you can say, okay, what can I do here? What is, by the way, in 3 years could go away as they like to do. They like to cancel everything the prior president did, which is totally fine with me. But so we have a window, and your question was, 1 to 2, 3 years, let's say. That's one of the things I'm focusing on. So what's inside of that? Because that's a playbook for investors. That's what it should be looked at. You can get upset all you want, or you can look at it and say, how can I play inside of these rules, these policies that have been passed? And that's what we're doing. So that's partially why we started doing this Billboards, because one of the things they did was they have 100% bonus depreciation. Another thing inside of that playbook is opportunity zones. Opportunity zones are simply areas that probably need a little bit of love, right? People aren't investing there, so they created opportunity zones so that you can roll your capital gains into those areas and hopefully redevelop bad areas, or areas that that need some attention. And so these are things that this new administration has. Now, on the Fed side, that's a jump ball for me. I don't know what's going to happen there. I can't imagine that Trump's going to allow that under his presidency. But the one thing that I'm cautious of moving forward is if I buy cash flowing real estate with fixed rate debt, I'm good. And then if they inflate the economy through tariffs and all this other crazy nonsense of money printing and all that stuff, whatever I own today is going to be worth more later just because of what the government's doing. So, and I always go back to the thinking, let's just imagine 10 years ago, who cares if it was a red administration or a blue administration? It doesn't matter. Go back 10 years ago and take a look at the home you lived in at the time. And where is it? What's happened? And then go back 10 years prior to that and go look at that. All you got to do is just see that hard assets, regardless of, if you're stuck in the weeds and you're bitching about a quarter point, half point, this, that, you have to take a long view. And for me, I just want to be in hard assets and let the smart folks on Capitol Hill fight it out however they want, and then just make sure I cash flow and manage my my little assets the best I can. If my tenants are paying them off, I know what my mortgage payment's going to be next year, 5 years from now. I'm covered, and then whatever moves. Tax moves, whatever things get taken away or added, then I make decisions based on that. So the new administration, whoever it is that comes in, is for sure going to change the rules again, and and then I'll just adjust.
Yeah. That's really good advice, and I think Robert would probably disagree with you with them being smart. On Capitol Hill.
I actually that was probably a misspoke.
No. So, could you share more about your multifamily deal due diligence checklist?
This is a real estate checklist that it started off as one page, man, when I got into the business, and now it's multiple pages. It's essentially, if you're looking something to buy, these are the things that you need to ask, right? You want to ask the broker, you want to ask the seller. So these are things that you're going to want to have on your list. You're going to want to send this checklist to people as you're starting to figure out, the details of an asset. So it's essentially just a checklist to get all the data so that you can evaluate whatever you're buying, and you make sure. And of course, the checklist is super complete, so it doesn't always apply to an asset that you might be buying, but it is a full checklist that's grown for us over time.
Yeah, and that's part of the planning, right? You mentioned that, anytime you're going into a deal, it's a lot of planning involved. So
yes, right. And you want to ask the right questions, like I want the due diligence checklist. I want the insurance losses. I want to know, are there any capital improvements needed? I want the utility bills. Just all the little things are on this checklist that a lot of people already know. But if they don't, it's just nice to look at a checklist and just go down it. And it's really, really good for if you're moving into some kind of purchase and sale agreement and you're asking the seller for a bunch of things. It's always good to evaluate the checklist versus what they're planning on giving you and what you want.
Yeah, and this comes from years of wisdom and trial and error. I'm sure, when you put when you put this together.
For sure, yeah.
Yeah, so obviously the audience here are metals and mining investors, and many of them are sitting on a lot of profits. They maybe want to look at some deals or something, and so it's good to have those tools.
Yeah, for sure.
Yep.
Yeah. I appreciate it.
Well, Ken, appreciate you for coming on the show and everything. Anything else that you want to plug the audience with, where they can follow you, connect with you? YouTube?
Sure. Yeah. Just go to KenMcElroy.com, KenMcElroy.com. Everything's there. Obviously, we've got a YouTube channel. We got a bunch of social media stuff. We have free emails that can basically tell you what we're working on. So we don't offer a lot of mentoring or coaching or anything like that. We're just doing our thing. We own 10,000 apartments, and I got a company of 300 people. That keeps me busy enough. But I enjoy teaching and educating, and it's all a blessing. And I really appreciate being on your show too.
Yeah, thank you for coming on, taking the time. You all be sure to hit the subscribe button if you haven't yet. And if you haven't gotten your tickets to the Vancouver Resource Investment Conference, be sure to click the link that is pinned in the comments. Robert Kiyosaki makes an appearance about every year, so be sure to come out and see Robert do his thing. And so appreciate you, Ken, for coming on the show. And
my pleasure, Darrell. Great seeing you, man.
All right, you too.